Here's a timely question. If you're expecting a layoff, what should you do?
Brian, I am so excited because a lot of times life will throw us some curveballs and there will be some unknown unknowns that come our way. And we want to make sure that we're prepared for those unknown unknowns, at least as best we can be. And right now is no different. I love that we get to be a resource for you guys, that you have questions and we can load you up with answers. That's why we do this live stream every Tuesday at 10 a.m. We have the team right now out in the chat collecting your questions. So if you have a question you want us to weigh in on, make sure you get it in the chat so that we can load you up. With that, Creative Director Reeve, I'm going to throw it over to you.
Yep, we've got the question from Christian A to kick us off. It says, I'm a federal worker, I'm 26, and facing a potential layoff. I have about $55K in my TSP, $25K traditional, and $30K in Roth. If laid off, should I keep my money in the TSP or move it to an outside account? And what else should he be thinking about if this is a potential thing that might happen in the near future?
Yeah, that's the part that stuck out to me. As I appreciate that Christian's trying to figure out what to do with the TSP. First of all, compliment to Christian, 26 years old, already with $55,000 saved up.
It's amazing.
From a wealth multiplier standpoint, that is incredible.
55 just in the TSP,
Yeah.
25 in traditional, another 30 in Roth. He's got a lot of money saved up.
Yeah, so this is pretty incredible, but doesn't make it any easier when big life changes or even the fear or potential for something big like a layoff coming your way. What do you do in those situations?
Yeah, so obviously a lot of people, a lot of our clients are faced with this right now. They're saying, hey, there's a lot of uncertainty. There's a lot of things coming down where we really don't know what tomorrow looks like. And that can be true for anyone. I mean, Brian, we've worked with clients even outside of this current present time where large companies will have reduction in force, so there will be mass layoffs. And so one of the things that you always want to make sure you're doing is keeping your financial house in order so that if something like that does come your way, you're prepared for it. One of the things, it's why we put it in the financial order of operations. Brian, do you have the thing that you can hold up? You know, one of the reasons why we suggest that you have a fully funded emergency fund is so that if something were to happen, if you were to be out of employment, if there were to be a reduction in force, if there were to be a layoff, you know that you have 3 to 6 months of living expenses where you can keep the lights on, keep food on the table, keep your rent or mortgage covered, and still be able to go out there and search and find for new jobs. So one of the very best things you can do if your employment is uncertain is make sure that you're not skipping steps of the foo or following too lean on your cash reserves, because your emergency fund is the thing, in fact, that can keep you out of the ditch. And then behaviorally, I always think it's a great thing if you are someone who's nervous about your vocation or nervous about the role in which you operate. I would begin looking around saying, okay, are there other jobs? Are there other positions? Are there other opportunities where my skill set would be valued? If I've been working in this specific job or this specific sector, is there a natural translation to another type of job or another type of skill set? And are there people I know that are already in that field, working for that company, doing that type of role? And how can I even now begin to connect with those people? Not with a very clear ulterior motive, but just in a means and method of understanding what's available out there. Because the more legwork you can do and the more relationships you can build before you get to that dire circumstance of, oh my gosh, I've got to find something tomorrow, the better prepared you can be if that is what comes your way.
I don't want to lose the fact. I want us to make sure we come back to Christian's main question about the rollover or keep it in the TSP, because I have some thoughts on that. But I feel like that this is such a big topic that I want to make sure we cover some of the big macro issues, because this issue is going to go beyond Christian. A lot of people are probably curious about this. And that's why I think about my 3D glasses, that you hear me talk about big life decisions. Make sure you put on your 3D glasses when you're creating plans. Job changes or layoffs are no different. You could run a 3D plan where, and just to remind you what I'm talking about is you've got your daydream, your dream plan is things are going to go as good as they possibly could. That's for somebody who maybe if you get laid off, all of a sudden, there's a job right down the street that pays you even more.
Or maybe you don't get laid off at all.
Or you don't get laid off at all. That's going to be that easy one, the status quo, you're copacetic, you don't have to worry about it. And then there's what you actually think will happen is that, hey, there's probably a better than 50-50 shot that I'm going to get laid off. So I need to start planning, what does this mean? And then, of course, the doo-doo is, man, I get laid off, but also I have to renew my lease. My car, blows a rod. There's all these things that can happen at once. And here's why I think you need to put on your 3D glasses is because, and I would think about it from a geographic standpoint to, the micro decisions you have to make versus the macro, is that if you think about in terms of, maybe this is just going to be a hiccup, whereas you don't get laid off, or you get laid off, but there's a job right down the street that you could easily roll into, because maybe I didn't know if Christian gave us what their feature, their job function was, but like accountants, you can roll into another job pretty easily. Engineers, others quickly fall into a new role, or make sure you're building out the plan where it's a big change. Like you geographically have to change, move to a completely different part of the country. Don't shortchange. Do the planning now so that nothing surprises you. That's the biggest thing, is to do the exercise so that you can experience it kind of in a virtual way versus the reality of it slapping you around and you not actually having a plan forward on how you're going to navigate this.
Now, with his actual question, okay, if this does happen, how should I handle my TSP? Well, we actually have a great resource available. I don't know if we can pull up the resources, but if you go to moneyguy.com/resources, we have a resource of what to do with an old 401k. Well, your TSP is no different. It's an employer-sponsored retirement plan, and you have a few different options when it comes time to leave jobs or to change your employment. You have 4, but you really only have 3, because this 4th one is not an option at all. The 4th option that you do not do is you do not cash it out. And far too many people, I want to say, what is it, Brian? 41% of people say that when I leave my job, I ended up cashing out a 401k, cashing out my TSP. I paid taxes, I paid penalties. Awful decision. Don't do that. So then it really comes down to, you have 3 choices that you can work through. You can either leave the money behind, you can take it to your new employment, or you can roll it into an IRA rollover. How do you decide which one makes the most sense?
Let's talk about thrift savings plans specifically. Here's what makes them unique. First of all, they're dirt cheap. I mean, I think the internal expenses for a TSP plan is around 0.04%.
Look at you.
I mean, that's practically free. Now, there's a caveat there. The asterisk is there's only really 5 investments. They really group these things.
Plus the life
so it's kind of
fund.
restrictive. You're not going, this is your area to get a lot of diversification. It's not, you don't have as much control as if you rolled this thing into your own IRA. So I would take that into account, and then I'd figure out is, what do you think you want to do with this money? I can already tell Christian's a financial mutant. You're going to want to keep this in a tax-favored way. Nothing wrong if you look at it and maybe the new job, wait, you don't have to do anything. Here's the good news. Don't get in a hurry. This is not something, because you can, especially at these asset levels, you can keep this money there forever. There's no hurrying up and making a decision is not a requirement in this situation. I would focus on the employment and the career stuff, but then after the dust settles on all that, then you can look at it and say, hey, okay, yeah, I had to change jobs. My new employer, man, they have a great low-cost plan, and they have all these great investment options. It's one of the big providers. Maybe it's a Vanguard, a Fidelity, a Charles Schwab. And you're like, well, hey, I could match that 0.04 with some of the index funds that are in this. Then you can make the decision, yeah, let's roll this into the new 401k. Or maybe you get to the new job and you say, hey, it looks like the golf buddy of the owner of this company set this thing up. It's got all these sub-account fees and all these other expensive things. I either need to keep it in the thrift savings plan, or I need to roll it over to an IRA so that I have complete control over what I'm doing. These are the type of mindsets or the decisions you'll have, but I still stand by, let's get you through the employment stuff first. Make sure that emergency reserves has got a lot of love on it, and that batten that up. Look at all your expenses, making sure that you don't have a lot of subscriptions and other things that are somewhat wasteful.
Love it.
Well, I went on some tangents. I can tell you I was entertaining you.
No, I loved it. You make sure that.
No, whenever you look over at Reeve, I'm like, oh gosh.
No, that emergency fund needs to have a lot of love on it. I agree with you.
A lot of love.
Here's another thing you can do. We know that the world is rapidly changing right now, and one of the things that we're trying to do is make sure we stay abreast of that. So if you're not subscribed to the channel, make sure you subscribe right now. So as the world changes, there's new information for us to put out there, you will be notified when we put new content out.
Well, it's funny you say that. It's because like I think about when we got nominated for some of these crazy content awards, and it was back during 2020. And we had people when we went to one of those influencer events, and they were coming like, man, all the PPP stuff. They were like, your channel was the channel I ought to go to, and I was like, that's crazy because we're normally not current events channel. We're typically just how do you make great financial decisions with your life. But don't worry, if all of a sudden things with the tax code start changing very rapidly. Now, I will tell you, I don't typically do content off of just rhetorical statements that a politician says. I typically wait until you actually see, because, Congress is who sets tax policy. I wait until that stuff kind of gets through some of the horse trading and other things that they do behind the scenes before we waste you. I realize I'm wasting a lot of good clicks because we could come up with some really great clickable titles and get you all excited to come in, and then you find out this thing is not even anywhere close. So we try not to waste your time, and we try to be very direct and open with you about that.
Love it.
Love it. Well, Christian, thank you for the question. And we are really hoping the best for you. And we hope that, if nothing else, this helps you feel a little more prepared for whatever happens next. So thanks for being here and asking your question. And it is a Tumblr day.
Hey!
Since we answered your question, we'd love to send you a Tumblr as a thank you.
I thought last week was a Tumblr day.
Was it?
I think.
Oh, you're good. The admin team is going to be so mad. Just when you open that studio door, they're going to be waiting for you outside there with their arms crossed going, I can't believe.
Why don't you just let me have this? Just go with me.
Hey, I'm all for it.
I thought you liked giving away Tumblrs.
That's the bad cops out there. We're all for give Tumblr for you, Tumblr for you. Everybody gets Tumblrs.
Confirming before, but lucky
for
you.
Gatekeepers out there, though.
I've said it now. It's a Tumblr day. Email winner@moneyguy.com if you would like one.
Yeah.
I really thought today was a Tumblr day, so I'm just going crazy.
Hey, we're with you.
Reba, you have the control. Whatever you want.
I do have the control.
We can't wait to watch the show after the show.
All right. Next question is from Micah. He says, I have an opportunity to invest in a duplex, but it would become a large portion of my net worth. I am on FOO Step 5, but well ahead of where I need to be in savings. What should I be thinking about?
So Micah, this is a great question, because a lot of people ask us this. Hey, I've been doing all the stuff that I was supposed to be doing. I've been following the financial order of operations. Brian, will you hold the thing up? For those of you that don't know, we have a 9-step tried and true process. You can get your free copy at moneyguy.com/resources. And you've been following the financial order of operations. You've been doing the things that you're supposed to be doing. You've been building up your assets and building up your resources. But then all of a sudden, an opportunity presents itself. In this case, it's Micah has an opportunity to invest in duplex. Oftentimes, it might be some business investment, or you might be able to make partnership at the firm that you work, or something like that. And you say, man, okay, I've been doing everything I'm supposed to be doing, but now there is this capital outlay required in order for me to do this thing that I think I want to do. And so you have to assess, all right, if I am to pursue this, what are the risks that I'm taking on, and what's the opportunity cost that I'm giving up? You've heard us talk all the time about we love real estate investing. A lot of people think because of what we talk about and because of the financial order of operations, we're anti-real estate, and that could not be further from the truth. But here's what we do know. When you invest in real estate, if it does not go dream plan, and it does not go down to earth plan, and it goes doo-doo plan, it can get really, really ugly really, really fast. And we've seen that happen. So before I would be able to tell you, Mike, oh yeah, it's okay if you kind of take this quote unquote risk on this duplex, I'd want to see your other foundational financial footprint to make sure that, okay, if you do this and maybe the duplex doesn't rent, or maybe there's a repair that you have to cover, or maybe there is a fill in the blank, you're not going to leave yourself completely out there naked. Because when I hear that you're in step 5, it does not suggest to me that you're in step 7. And generally, we see like real estate and those types of investments happen once you get to hyperaccumulation. Agree, disagree, want to fight?
Yeah, I wrote down a few quick notes. Look, let me tell you why I love real estate, but the same blessing that makes it so awesome is also its curse. Is that the reason you can make wealth with real estate is because you're using leverage. Think about it. You put down a small down payment. You go borrow historically at lower rates. Right now, you're not getting a great deal on the interest rates on it. So you better be very purposeful with your decision making. But you're borrowing the debt. And then we know capital assets, just the nature of the way the world is, there's going to be inflation, there's going to be appreciation. And if you from a cash flow perspective, you put a small amount down, but the asset, the fair market value of the asset is appreciating at the full value, not just at what you put down as capital. So it's very quickly a great opportunity to build wealth, because you're like, hey, I put down $30,000 on this thing. It appreciated over $30,000 just last year. It's 100% rate of return on paper. You're like, wow, this thing's a no-brainer. But here's the curse. Because it's debt, you borrowed the money that you don't have. You're counting on people to make payments in the background so you can keep it. If all of a sudden they quit making payments, you have to now carry that weight. And if it doesn't work out, most people just can't sustain those payments long enough during the desert of bad periods in real estate that they end up losing the assets, and it ends up pulling them all the way down. So there's a better way to do money. And let me tell you, that's why the financial order of operations is your friend. Without a doubt. Now, Bo, he's like playing horseshoes with the financial order of operations, because I actually consider real estate to be a prepaid future expenses or abundance goals, step 8.
This guy.
It's but here's the thing. I put an asterisk on it. I'm going to put an asterisk on it because Micah's let us know he's only on step 5. So right there, you think that's a disqualifier. But here's the asterisk. He said it's a duplex. And there is a caveat that I'm going to tell you, lets you have the potential to consider doing real estate earlier, and that's house hacking. If Micah tells me that he's going to live in half of this duplex, and it's all fits into the scope of housing allowance, and and he's looked at his cash reserves, and maybe he's beefed up his cash reserves enough to where now this thing gets a lot less risky from a leverage standpoint, because he's living in half of it. By the way, this is also going to be great for the bank, because the bank's going to love that you're actually living on property instead of it being an investment property where they're going to charge you a much higher premium on the mortgage rate. You get to say this is your primary house, and you get the better rate, and you're not fibbing about it. You're not creating any false narratives that get you in trouble with the law if you got caught on it. So that's what I would tell you, Micah, is that if you're telling me that you're looking at this duplex as a house hacking opportunity, you still have to go do all the work. You have to. I'm not giving you permission to break the foo. But I'm telling you that you can consider getting into real estate a little bit earlier, and a duplex is the perfect way to house hack. Because, by the way, you're also going to be a better landlord. If you live next door to the people that you're renting to, guess what? You're going to be able to tell if they're tearing up your place. You'll probably hear them tearing it up. So you're going to be much more likely to keep your eyes on what's going on with that tenant. And you'll probably, truthfully, you'll also keep the bad elements away, because they know, hey, look, if this guy owns it, I'm going to be under his thumb.
Paying attention to what's going on.
Yeah, it's I'm probably not going to be able to change engines in the living room like I've told you horror stories that I've experienced with some of my clients who did rental property.
Great. You really covered some bases. I was just making sure there was nothing else
You thought
that
I was
you wanted to tell Micah.
because he called me out on the financial.
I kind of did, but I'll let it go. I'll follow your lead.
But also, Bo, look. Now, I was sick last week. So there's no telling, because I've been on cold medicine and everything. There's no telling what's coming out of my mouth today,
or anytime ever, if we're going to be honest.
I don't think it's any
but,
cold
but
medicine.
you said earlier today. You already said and you might be in a translation, and I was like, Bo meant transition, but he said translation, and I was like, Bo is so. I'm the one that plays horseshoes with the English language, so it made my heart feel good, because Bo is perfection. I'm kind of the one. I mean, look how fly he's looking today with that outfit and stuff. I mean, that's why he has to put.
I think that makes up for everything else.
He has to put a smudge by mispronouncing a few things, or maybe getting not everything perfect on foo, just because looking so fly, and it's good. It makes all the rest of us feel better about ourselves.
He's so kind.
Okay. Well, Micah, thanks for the question.
Yeah, Micah, it was asked a question.
Yeah, I want to make sure I give him a Tumblr, since I have sanctioned this as Tumblr Day. Just email winner@moneyguide.com if you would like a Tumblr, Micah. All right, Van Smacker has a question for you.
Van Smacker?
Van Smacker.
Like you're smacking that van door closed, or? Okay.
You can take that however you want. All right, it says, what are the pros and cons of filing married or filing separately? Considering it to reduce student loan payments, They have $200K in student loans, the lawyer, and my income is double my wife's. So they have $220K household income. A lot of information there, but what do you think about pros and cons of filing married versus filing separately?
Yeah, this is a really, really interesting one because in most scenarios, and Brian, you've been an accountant for like 100 years. So in most scenarios, when it comes to filing, it's often more advantageous to file married filing jointly than married filing separately. When you look at where the tax brackets are, when you look at credit exclusion, when you look at deduction availability, generally speaking, married filing jointly is more advantageous than married filing separately. But there are some unique scenarios, and we've seen this with some of our clients where when you actually run it and you look at the married filing jointly return versus the married filing separate return, there may be reasons why it might make sense to do that. One of them could potentially be student loan if you're on some sort of like income repayment plan or something like that, or you're trying to qualify for deductions that you would not qualify for otherwise. Here's what's really, really great about your question, because not knowing your specific situation, not knowing what your actual tax return looks like, we won't be able to tell you which is most advantageous. But most accountants and most softwares, even if you're self-filing, will allow you to test this. So you can actually run one iteration, married filing jointly, and you can see what the overall tax liability for the household is. And then you can change your election to married filing separately, and you can look and see, okay, what changes, what things adjust, what things are available versus not available had I filed the other way. And you can make a determination based on, okay, which one of these is going to make the most sense. But you just need to make sure that you recognize that there are things that will be affected by how you choose to file. For example, Roth eligibility or that sort of thing will change based on your filing status. So you want to look at your entire financial picture before you make that election.
Yeah, look, I like always sharing the fountain of knowledge, especially when the fountain of knowledge is fruitful. You're like, man, that was great that you shared that. But this was one. Because my answer is kind of your answer, Bo, is that I think you have to go just do the work.
You have to look at
I would
both.
go, I know all the professional softwares that I worked with in my 16 years of doing taxes, all allowed this feature where you could compare. It was just by clicking a button. As long as when you were setting up every one of the inputs, you better make sure you put the ownership. Is this an individual? Whose name is this in? Which spouse is this attributed to? Or is it joint? You have to basically divvy up all the income sources, but assuming you put all the inputs into the software correctly, usually there's a button you can click that lets you then compare and contrast these two different features. And it wouldn't surprise me. I'd love if somebody in the comments section, since it's a live show, tell us, does TurboTax let you do this? Because I mean, I just haven't had a lot of experience with Intuit or any of the others. I've dealt with their professionals, Lacert and other things, but to let us know. I will speak in terms of filing separately versus jointly. Typically, what I've experienced in my professional career is that somebody has to have something so bad going on that it stinks so bad that you don't want to be associated with it. And that's when you file separately. Like
It's more because of a behavioral thing than a strategic
well,
thing.
it's like if there's all kind of, like I'll go the extreme. Somebody's doing criminal stuff, you don't want to be filing a joint return with them. If somebody has tremendous debt to the point that they're probably filing bankruptcy and you don't want to attach your good financial record to it, you probably want to get away from that by filing separately. If somebody has tremendous risk in their life, maybe they're doing a job that is highly litigious and they can get in trouble, that's when you consider filing separately versus jointly, because you're just trying to, like I said, it's typically things that something smells so bad or has so much risk to it that you're trying to create as much separation from it as possible. And the reason that is because there's a lot of financial stuff that you miss out on when you file separately versus jointly. That's my take on it. And I hate that I can't give you a concise. I love it when I can definitively tell you, yeah, the 401k funding limit, once you're this age, is this, and do it, go and maximize it. This one, you're going to have to actually do the work and then actually see what the inputs come out of.
And I would encourage you, don't be penny wise and pound foolish. Obviously, it sounds like for this question, one of the reasons you're trying to do it is so that you can drive down the required student loan repayment. And while that may make sense, that may be advantageous, make sure that singular goal that you have is not causing you to miss out on other things that could be happening inside of your financial picture. So often we see people get focused on one outcome or one goal or one strategy that they lose sight that there are other unintended consequences around that decision. So make sure you look at the total picture before you decide which way to file. And this might be a great time where it does make sense to work with a professional tax preparer who can give you the ins and outs about why you should or should not file one way or the other.
Well, that's why you'd have to do a tax projection or something that goes through the entire exercise, because you just don't know what unintended consequences you might. Yes, it might help you on this student loan repayment, but then you might, mess up all kind of other things with, you had a capital gain or something that now gets allocated to one and you get to spread it. It could be a mess.
Yeah, so you definitely want to measure twice, cut once, as they say. Hopefully that gives you some things to think about, Van Smacker. If you would like a tumbler, just email winner@moneyguy.com as a thank you for asking your question.
Hey, can you give us a question? Let's feel smarter. Because I hate it when we answer a question. I feel like we gave them more questions than answers.
That was the right answer.
I thought that was a wonderful
You gave him a
answer.
ton of good things.
Like
to
I
think
said,
about.
I'm on cold medicine, so who knows how good that But it is one of those things where I don't know. There's just a lot of variables and levers to pull on that, and I hate when we can't give definitive answers for somebody to plan off of.
So you want a question? No variables,
No,
no
just
levers.
it's more of a statement. Go ahead. Do what you're gonna do, Reeves.
You do you. You do you, he said.
I know that
Give
you
out some
can't
tumblers. Did
tell
you give
him
out a tumbler though? Did you get a
definitively.
tumbler on that one?
He did get a
We
tumbler.
did give Van Smacker.
Smanbacker.
Van
Tumbler was
Smacker a
given.
tumbler.
All right. Nova S has a question up next. It says, "Hi team, I will be starting a new job next week.
Is
Do
that
you
like a
have
66 Nova, or is that something from the stars?
I don't know, just Nova.
Keep going.
That's the name.
That got an audible laugh from the
From the
in-house
comedian.
I don't know if that's good or bad. All right. Back to the question. I will be starting a new job next week. Do you have any tips or things to keep in mind for 401k rollovers? For context, most of my money is in a Roth 401k and my employer match did not vest. So that is unfortunate. What should he be thinking about?
Man, so this is so funny. I literally have this issue with a client, and client, if you're out there listening, you're going to know exactly what I'm talking about. That they have this idea that, man, okay, I've got this unvested money inside my 401k. Well, I don't want to roll over my 401k, and I don't want to roll over into an IRA because then I'm going to lose that invested money. And what I had to remind them of is, unless you go back to work for this employer, you're never getting that money. It's gone. If it's not vested, the only way for you to get back into getting that money is to go work for that employer to continue working towards your vesting timeline. So,
But there is an exception on one thing.
tell me more.
If the employer has profit sharing,
Sure.
and they don't pay it out until the following year, you might want to wait for that money to hit before you roll the money out.
Of course.
Because it's not uncommon that you leave an employer, you are vested for a portion, they make a profit sharing contribution in, say, June of the following year. It's just easier versus you getting a notice that, hey, you have $2,200, and then worse, because you already rolled that money out and because you're now less than $5,000, they just send you a check with taxes withheld, and then you going to have penalties. It's better to kind of make sure that your 401k experience is completely over and fully funded or unfunded before you roll it out.
And so as you're trying to navigate this, we have a great resource. You can go to moneyguy.com/resources about what to do with an old 401k. You really, generally speaking, have 4 choices, but you don't really have 4. You've really got 3 because you don't want to do the cash out part. One of the unique things about what you said you have going on is, hey, most of my assets are in a Roth 401k. Well, we love that because one of the beautiful things you can do is when you roll over a Roth 401k, you have the option to roll it into a Roth IRA where you can choose the custodian you want to work with. Do I want to put it in a Fidelity plan or a Vanguard plan or a Schwab plan or a fill in the blank? So you can choose the custodian. You can choose your own investment mix inside of that. One of the beautiful things about doing that is there's a good chance it's going to be lower cost if you do that. And one of our favorite things is if it is a Roth 401k and you do roll it into a Roth IRA, you don't have to worry about blowing up your ability to do future backdoor Roth conversions. Because oftentimes, one of the reasons why we'll tell someone to roll an old 401k into a new 401k is we want to make sure they keep intact the ability to do backdoor Roth IRA contributions. If you roll that 401k into an IRA rollover, now you've subjected the dollars when you convert to the pro rata rule. So there's a whole list of things that you ought to think through when you're trying to decide what to do with this. But I do feel like the fact that it's Roth makes it a little bit easier.
Definitely makes it a lot easier. Now it's just a matter of what options do you have investment wise, and you're in a good situation.
And so one of the things he asked was, hey, any tips that I should keep in mind? Since he's brand new to this new company, brand new to the new employer, what things should he look for inside of his new 401k to decide if it's a good plan or not? Like, how can you tell if your new 401k is a good one? What are the things you look for?
Pay attention to the custodian. And then look at the custodian to see what investments. And by the way, sometimes you have to be careful because there's a lot of insurance companies that will then, I don't know, I think they've modernized a lot of this stuff so you don't fall into it. But these sub-account fees, because I remember I'm not going to name, there was a life insurance company that had a Vanguard funds all in there for, but you looked at it and you're like, oh, Vanguard's cheap. These things are, 0.1% internal expenses on their index fund or something like that. And then you look at read all the documentation for the 401k and you say, no, it's actually at 1.5%. You're like, well, how in the world does a Vanguard fund have a 1.5% cost? It's because they had stacked in a bunch of sub-account fees and other things. So I would actually go read all the summary plan description, all the documents that when you become a new enrollee into a 401k, they're going to give you a bunch of disclosures. Actually go look at it. Go see, who's actually the custodian. What are the internal expenses? What other fees are you paying in this 401k? And what are your investment options?
There you go.
If you see index funds, that's probably good key that you have a low cost options, but just make sure it's index funds with the benefit of low operating expenses, not index funds that still are costing you over 1% per year to have. That feels a little counterintuitive.
Love it.
Moneyguy.com/resources if you want to go grab that what to do with your 401k resource. We get questions surrounding that a lot. That's why we made that resource, kind of put all the basics in that one little package for you. So go grab that. It's free.
Did
and
you like
Nova.
Did you like that one better?
What do you mean?
Did you like that question? Did you feel better about being able to give
I felt like we added some value. Plus, we had a resource that came up on the screen.
Great.
I mean, whenever a resource pops up on the screen, yeah, we got him on that one. That was a good one.
Nova, if you would like a Money Guy tumbler, just email winner@moneyguy.com.
Hey, can I throw out one thing really quickly? For folks who might be visiting with us for the very first time. Hey, I don't know if you know this. We have a brand new show that just rolled out called Making a Millionaire. And it's pretty awesome. We have a lot of fun. We had our second episode debut last Monday, not yesterday, but the Monday before, which means the next one's coming out
next Monday.
So if you are not subscribed to the channel, make sure you subscribe right now so that you get notified when our new content comes out. We love that we get to do this stuff for you guys, and we hope that it is incredibly valuable for you. So thank you for allowing us to be part of your financial journey.
Hey, do you know which episode's coming out next?
Oh, yeah, that's a good one.
Y'all didn't hear that because I was all set.
You were just like,
no,
we'll
it's
keep it a surprise.
It's a really good one.
Actually,
everybody just got to see our reaction. Like, oh,
that's what's coming on Monday. Okay. Question from JP is up next. Hello, I'm 22 and about to get married. Congratulations, first of all. That's exciting. What are some practical ways to get me and my lady on the same page financially? Which that made me chuckle. Good question, though.
Bo, you're an expert on this.
So let me tell you, on the way to the honeymoon.
Can I finish it? He did say a little bit more. He said, we both believe in investing and saving, but I want to ensure communication is the same. Because that is different than just philosophy, right?
Because I'll pick on you, but then I'll let you give a lot of details. My wife and I, we actually did some premarital type counseling before we got married to talk about communication and other things. I think that's actually very helpful.
Sure.
I really do, because you might find out in those conversations how things you think the way you look at the world or money and how your spouse or future spouse looks at it might be more different, because we all grew up in different houses, different mindsets, and it's kind of good to kind of get some of that on the table and have somebody in between, whether it's a pastor or a counselor. It's just good to have somebody as a third party there. And I think it's a good exercise. How could having open conversation about big life things not benefit you in the future? Now, I want to pick on Bo.
Okay.
We did a show, and you can find it in the archives. It's going to be from 2012.
Yep, that's right.
So that's how long we've been doing this, guys. So 2012, there was a show It's going to be before June.
I think the name of it was Love, Marriage, ... and Finances. Look at that steel trap.
So I had Bo. I wrote down a bunch of great questions for Bo because I knew he was just going to make all kind of mistakes. And now he's been married so long, he's a veteran of this thing. But I think it was some question like, I said, how much would your spouse be able to spend before they have to come talk to you about it?
Yeah, like what's the check-in number?
I think your number was like $20 or $30.
It was $40. Still remember.
And I was like, Bo, I bet her shampoo costs more than that.
You would be right.
And he was like, no, there's no way. And then this knucklehead, you really did plan on your honeymoon. Y'all were going to have all these financial conversations.
It's a flight. What else are you going to do on a flight?
Now that, I would encourage everybody to go listen to the show. It's great entertainment. But I would ask you, now as a guy who's been married unbelievably, you've been married, are we 13 years this year?
It'll be 13 years.
That's incredible. Wow, it makes me feel old. Because I got to see this thing from inception on. What have you learned?
Yeah, so I do think that communication is wonderful. And before, Reby, if you're okay with this, before I talk, because me and Brian have both been married for like a long, long time, and we bring like financial stuff into it. When you got married, was there something that you and your husband did to like get on the same page from a communication standpoint, specifically around finances? Was there something that you're like, hey, this is how we did it, how we navigated it?
I will say what I wish I had was our food course. I don't even mean that cheekily.
Wow, look at that. He finds a product placement in the answer. Well, that's brilliant.
Here, I'll say more real answers before that. But genuinely, I think that kind of thing is really helpful. I remember he had listened to some financial like audiobook before. We didn't know you guys at that point. So we really missed out.
He's a big guy. I'm a little scared of him, so I'm not going to hold that against him.
But that just started the conversation. So honestly, it was more, there was a while where we would do weekly budget meetings or like just have like a check-in about, hey, here's what we're spending, here's what we want to do. And we had like some high level goals. I remember we were both working full-time jobs and not making very much money, but we were trying to like save one whole paycheck. I remember that was like our goal that we had. And so like we had a goal that we were working towards and like the reasons behind it. So like if anybody wanted to stay home with kids one day, we could do that. And then we would try to check in on the minute things weekly. That was what we did at the beginning. Wow, that feels so long ago.
I love it. One of the things that I learned is that equal voices and equal opinions matter. I came into my marriage, I was already a CFP, was already a CFA, had been managing money, was living in this world. And so I thought I knew everything about finances. I thought I had all of the right answers. And I was very quick to let my bride know that I had all the answers, I had it all figured out. And what I came to recognize as our marriage has moved on is that when it comes to money and finances, it's not binary, right answer, wrong answer. It's not that. What it comes down to is, what are your ultimate goals? What are the things that you derive value from? And what do you want to allow your money to do to help you hit those goals? And once I started realizing that I could not impose my goal of living as cheap as possible and saving as much as possible and investing as much as possible and doing and sacrificing as much, I could not impose those goals on my wife. And I had to let her have space to communicate, hey, here's what I want our life to look like. Here are the things that I value. Here's how much I care about throw pillows. And I had to have that conversation with her and let that be an open conversation. And now what I've recognized is that as we've aged and as we've matured, a lot of the things that we want are now the same things. Hey, we want to do this to the house, or we want to create this memory for the kids, or we want to work towards this financial goal. It's because we've had an ongoing, continuous back and forth conversation where we're both able to speak into it. We joke all the time. If I were completely in control of our marriage, it'd be the most boring marriage in the world and we'd have $1 gazillion saved up. And if she was in control, it'd be the most fun marriage in the world. We'd be dead broke. And yet here we are in that wonderful middle ground. And that's what I think a good partnership does. It finds the middle ground that works for all parties concerned.
I have real stuff here, but you said something that made me think of, because like I said, I've seen this thing from inception on. And I remember when Bo had a house back in Georgia, and he had this house before the marriage. And when she came on the scene or whatever, you wouldn't turn the heat on.
Not in the wintertime.
In the winter. I mean, there was like it's like almost like the pipes would have to be freezing outside for Bo to turn and it's just things like that.
Sweatshirt,
remember, this is the guy that also, when he lived, because him and his wife lived with us for like 4 months when they were moving up here to Tennessee. And my oldest daughter still talks about how Bo used all the big spoons because he was
His
eating
favorite
cereal.
story.
Every meal was was cereal because he was trying to
Publix, buy
save
one, get
money.
one.
It's amazing that he's been able to feed these muscles with just carbohydrates from General Mills. It was truly amazing. But okay, here's what I wrote down as greatest hits. Be intentional. And I'm serious about this. And look, I'm going to tell you to do the hard thing. Don't skip leg day on this one, is budgeting. I hate budgeting. Nobody likes budgeting. It's not sexy. It's not fun. But I think in a brand new marriage, y'all should probably be very collaborative. Sit down, actually write down where you think what money's coming in, what money's going out. It is built into the food course, is Reby, to kind of echo something Reby said, but do the budget, at least in the beginning, so you can get that muscle memory and build a cash management plan where it's automatic for the people and the money just starts going where it's supposed to go naturally. And then you can graduate out of so 10 years into marriage, you're not asking for your spouse every receipt that they have because you don't have to do that after you've done it long enough that you develop the muscle memory. But do the budget. The second greatest hit is do the net worth statement. Look, one of the things, I didn't start doing my net worth statement until my very early 30s, and I regret that tremendously. So at 22 years of age, y'all starting out as a marriage, if y'all do the annual net worth statement, you're going to be amazed. Even if that number is negative or even zero in the beginning, it's okay because you're going to build essentially your story arc and be able to every year go back and review it and see how the assets have changed, see how much debt has been paid down, and kind of just see where the wins and losses are so y'all can talk about it, because then it's a great conversation piece for the next thing I was going to tell you, and this ties into the intentional part. I have an annual skip day now. And I love, I look back on my high school days. One of my favorite memories was senior skip day. And by the way, my daughter, when she went through and had her senior year, I let her skip because I loved it. I mean, it's crazy but you feel naughty doing something that's actually good because it was organized. Like we went bowling on mine. I think she went and did some organized thing, and it's the same way with this. So even though it feels like you're naughty in the fact that you're skipping work for a day to hang out with your spouse, you're actually going to be very intentional about it, and you're going to go to a coffee shop or somewhere, go have breakfast together, and you go sit down and you go review the net worth statement, you go review your goals for the year, you go review the goals from last year, and you're going to kind of craft out what trips are we doing this year. It can be so fun, and it really is a great, meaningful way to communicate and build in the marriage.
Love it.
Wonderful.
Marriage skip day.
Marriage skip day.
We make
that is a really
this
good
could be
idea,
another,
like
like I want to have Money Guy Supper Club, we can have Marriage Skip Day.
Marriage skip, Money Guy.
Because remember, Money Guy Supper Club is where everybody's going to do the food course. Well, while trade houses every month they'll go to a different house and do the thing. So we could have Marriage Skip Day.
You and 9 friends. Here's our desire for you. You and 9 friends. We're gonna do a progressive dinner, 9 courses, and each course you're gonna go through one of the steps of the foo all the way through. And this writes itself, Nick. I think.
He's not. He's not
very
skeptical. Yours. He laughs at my stuff. He doesn't laugh at yours.
But if you want to know more about the food course, of course I'm a little biased, I'm here, but it is a really good course. And if you're looking for something to spur some of those conversations and learn how each other communicates about money, what your goals might be as a couple, go to learn.moneyguy.com and at least check out the food course. It's at a new, very low price. So honestly, it's a great intro to personal finances. And
I mean, we got it all backwards. We made it better and cheaper. These things aren't supposed to work together.
That's the money guy
accurate.
You know what I mean?
You're supposed to charge more when you make something better. We're like, nah,
we don't always do things the traditional way like that, but it's better for you. So go to learn.moneyguy.com and check it out.
Do what we want.
All right. JP, if you'd like a tumbler also, go to...
Look at that. Giving away more money.
I am.
Oh, well, that's it.
Email
you get
winner,
a tumbler.
Email winner@moneyguy.com.
Take that, Snipes.
She gonna come
They're
bursting
mad at
through that
you
door.
today.
She's not going to be mad at me. It's not me. It's Reby.
Okay. Big Shoe has a question next.
Now.
She is scared.
I have a large income at my first job.
Big Shoe.
How do I plan my savings in case I never make this much again? Should I mega backdoor max or put some in brokerage so I have access to the funds earlier? Thanks. What do you think?
I love this question because a lot of people find themselves in this situation. I mean, the clear and obvious example is like professional athletes, right? You make it through and you sign this big contract. You're making this huge income at a very, very early age. But we all know the life cycle of most professional athletes, career-wise, is not all that long. You make this great money for a very short time period. But even if you're not a professional athlete and you're not someone who lives in that world, it's not uncommon for young folks today, especially if you work inside a unique industry like the technology industry, where you have some like very high earning years very early on in your career, but it is not clear and it is not apparent if that's going to continue to hold, if that's going to be the case forever. So what do you do and how do you capitalize on that? Well, my advice, and this is the same advice that I give professional athletes when, I was talking to a guy earlier this week and I literally gave him this advice. I said, hey, right now, while you're making this kind of money, save like a banshee because these days might not always be here. Now, you still have to balance, like, how do I enjoy the present, make memories today and do things today? But if you know that you are in a very unique, very high income situation, in my opinion, it makes sense to take advantage of as many different savings opportunities as possible. So if you have access to like a mega backdoor Roth or your 401k, yeah, I love seeing you do that. If you can do an employee stock purchase plan, yeah, I love seeing you max that out. And do those things early on and keep your lifestyle and your living expenses, your fixed expenses as low as possible, at least until you start building up that base. Because what happens is as you build that base, then you reach what point do you reach, Brian? You reach that bowling point, right? And then the bigger the numbers get, the bigger the numbers get, but you got to get there first. Would you agree? I mean, Brian, you've talked to tons of young folks who make tons of money. How do you counsel them to think about that moment in time lightning?
Well, I mean, there's several things. I mean, I haven't told a good Dave Grohl story in a long time. Dave Grohl and his father had a very contentious relationship. But when he started getting his first checks from the Nirvana days, his dad, who was more buttoned up, business type, had told his son, he said, hey, look, you need to be a little scared. Assume these checks are not going to keep rolling in. This might be just a moment in time, so you need to act accordingly. And Dave says, look, I took that to heart, and I started saving that money, putting it to work. And I think that's what, and I have some experience. I worked with a lot of professional athletes at the second firm I worked at. And it used to make me so sad. Actually, first and second firm did a lot of professional athletes. But it made me so sad to see these players that would be getting these 7-figure paydays. But it didn't matter if I would tell them, they still wouldn't listen, because I think it's just human nature is we just have this recency bias. We think what's happening today will happen tomorrow and will happen 10 years from now. And it's just not the case. I mean, for a lot of people who make great money, that's why income stats are always skewed is yes, somebody might make $1 million in a year, but they never tell you, did they make $1 million for 10 years? No, more than likely, a lot of people make $1 million and then 2 or 3 years later, they're making $200,000 because they had a really good bonus year or something else. So you need to know that sometimes you might be making 20 years worth of income in 3 years, and you need to act accordingly. Now, here's the good news. If you do this, if you actually act disciplined and use the financial order of operations, it's not like you have to go in this thing cold. That's what cracked me up about Big Shoe. Is because Big Shoe's like, is there a way I need to? Yeah, think about it through the food. Is because I've walked you through, because this thing's going to do multiple things. It's going to build up your cash reserves to keep you from making desperate bad decisions. It's going to keep you away from debt. It's going to let you start investing in the most tax-favored way possible. But then it even breaks free in step 7 and says, hey, once you get beyond 25%, what do you need to do? In step 7, when you think about hyperaccumulation, this is when you say, when am I going to use this money? When am I going to need this money? Because maybe I need to save more than 25%, or maybe I'm copacetic and actually can stop right here and even recalibrate from 25%. You don't know that without doing the exercise. And what I like about this, if you plan this way, is the worst thing that can happen to you is you get more freedom and flexibility in the future to change course. If you defer and you say, you know what, I'm making great money now, I'll just wait I'll start doing this 3 years from now because I'm sure I'll be making great money then. There's no way to get it back. The water doesn't go back up the hill, and you have to, more than likely, you might get caught in a desperate situation, and then with a lot of regret, a lot of wishing, man, if I'd have just done things a little differently, I'd be in a different place. That's why our situation works better because it's just like me. I thought for sure I was retiring by the time I was 50. So when I was in my early 20s, I was like, I'm going to save so that I can retire at 50 years of age. Guess what? You guys make my job so much fun that I got in my 40s and I was like, I will never retire. But I was like, am I mad that I saved as much as I did? No, I get to do even more stuff where I don't even worry about the money with it. I'm like, yeah, hey, Caleb, go redecorate and do things all a little differently in the studio. You can spend this much more money. And it's not because it's tied to anything, but it will probably pay itself back. Yep. And that's what I love about the freedom and the flexibility when you don't have to make decisions out of obligation. You get to make them out of your passion, out of your desires. And that's why owning your time, owning your money, owning your life that much sooner. So Big Shoe, act accordingly. You know, if you have a good income coming in, but you're not sure that good income will come forever, then be serious.
And in terms of setting yourself up for success, when you have a big income, you can either have a large savings rate or a large lifestyle. You make the choose. It's a balloon that you squeeze one way or the other. If things don't go your way in the future and the income goes away, it is much easier and much less painful to back down your savings rate than to try to back down your lifestyle. So if you're really nervous about this money not sticking around long term, make sure you don't live a lifestyle that requires this level of income for you to maintain that standard of living.
Hey, Bo.
Hey, Bo.
I said boo. Hey, Bo. You know what they say about big shoes?
Tell me more.
Big socks.
That's what they say.
I didn't get a laugh from Nick on that one.
Great.
Dadgummit. I should have stopped 1 for 1. Now I'm 1 for 2.
Got a little overconfident.
Yeah.
That
one didn't even foul off the wall either. That was just a swing and a miss.
Well, Big Shoe, if you would like a Money Guy tumbler, just email winner@moneyguy.com.
Come on, Nick. Can you give me a little bit on that?
Oh, sick burn.
He said he'll give it to him when it's good, you know.
We don't have to. You don't have to convey the messages. That's actually one of the powers of them not having microphones.
I only convey some of that.
See, I got to laugh on that one. Okay, we're 2 for 3 now. Picking that percentage rate. That'll get me in the Hall of Fame.
Okay. Next question is from David L. It says, how do you avoid comparison from others' financial picture? I'm 32, 2 kids under 2, new house within the Money Guy rules. My wife is in a job transition. How do we stay encouraged? Sounds like the picture of the messy middle, Bo.
Bro, you are in.
I love this question.
You are in the messy middle. The messy middle is this stage and station of life where all of a sudden you wake up and you're like, I've got no free time. I've got no discretionary income. I've got 1,000 different things pulling me in 1,000 different directions. And I feel like I'm stretched so thin. And because I feel that way, one of the things that I naturally do to cope is I look around at people around me. I'm like, man, it doesn't seem like they're struggling the way I am. It doesn't seem like they're as tight. It doesn't seem like they're freaking out. It becomes very easy in this season to begin to compare yourself with other people. And so how do you stay motivated? How do you stay level set? Well, the first thing I would tell you, and this is what my wife and I talk about, because you know we got 3 little kids that, I mean, they're not under 2. We got 1 that's right at 2. We're like, you know, it doesn't matter what other people have going on. So someone else, we go out to a restaurant and someone else's kids are like perfectly behaved and they're, you know, crocheting right there. And our kids are just taking tater tots and flinging them across the restaurant. I'm like, hey, this is our life right now. And this is our season and this is our family and this is our us. And that's okay. It doesn't matter what other people around us are doing because what we care about is our family and what we're doing. And your finances are no different. So if you and your wife have a solid line of communication, we say, hey, this is why we're making the decisions that we're making. We want to be able to pay for these 2 kids to go to college. And we want to be able to be financially independent. We want to be able to provide memories and create a lifestyle that our kids are going to look back fondly on. And we're going to make sure that we don't have to move in with them in the future. If you guys have clearly defined the goals and the things that actually matter to you, it does not matter what anyone else has going on. And oftentimes, in the world in which we live today, most of what you see other people have going on, is kind of fake or pretend anyways. Agree? Disagree? Want to fight?
I had so many ideas just pop in my head. None of this is probably going to work, but I'm just going to go with it. I'll blame the cold medicine. I was thinking about, because I had an initial thought that I immediately wrote down, but I was like, but where did that come from? And I think about when I was a kid, the few times I got picked on. I've told you, you guys all know the Johnny Thaxton and the Andy Settle stories. Second grade over my pick and pay shoes, and then in seventh grade in shop class. And I remember as a kid, you go home and you tell your parents, before my dad would, after a while, he'd just be like, you need to punch them. But, but before that, he'd be like, son, they're picking on you because they're jealous of you. Now, that is such, as a kid, logic that works.
It works.
But now as an adult looking, I'm like, what the heck was he talking about? But it is a great skill set to break the illusion of who cares, what's going on. Because what I wrote down immediately was, you've got to break the matrix. I think the system wants you to be broke. I mean, we have the entire world trying to get you to overconsume. We have everybody, it's just like one of the big custodians out there just changed how they're doing the default cash management, where it's hosing you out of an extra % or two. I'm not going to say any names, but it's stuff like that. I'm like, goodness gracious, the system continues to show me they don't want you to have money. So if you can understand that the matrix is broken, that you've got to completely retrain your brain to where, and more likely, your friends, you can love them, you can go on vacation with them, your relatives, you can love them, you can do everything, but realize they're probably horrible with money too. So you can't even use the comparison of all the things you see in their life or what you see on social media, and it brings you like, man, I don't know if I love what's going on in my life because they make me feel bad. Realize it's all fake. They're giving you the highlight reel, and that's why I spent so much, and we had a studio tour come by yesterday, and they got, guys, those last 2 chapters just crushed it. Those last in Millionaire Mission. I basically tell you why you got to focus on your why and knowing what makes you happy. And, and I caught on at a really young age because my dad got laid off when I was in middle school. And I realized that when we had some of the happiest days of our lives, when my parents were in their brokest stages of life because my dad was around and we were doing crazy, funky vacations, like going to timeshare presentations. It was such an education for me because I realized how disconnected happiness was from money. And that's why, David, you've got to spend some time take inventory. It's all built into the book. It's built into our food courses. Take inventory of who you are, what brings you happiness, what really makes you drive to do things, and then cut out the noise. I lean in. Look, of course, our conflict is we think that we have the better message, but I really do believe it. I think if you hang out with us enough, we have this side effect of creating success. That's why it's called the abundance cycle, is that we just keep loving on you. I try to break the matrix message so that you can feel empowered to live your best life and not get caught up in having the latest, greatest, moving the goalposts, after you probably are in a place where you're pretty happy. I mean, there's a lot of things that I think that don't let the system convince you to outspend your happiness to where you actually end up over-consuming to the point that you actually took away your opportunities for living your best life.
A few tips on how to stay encouraged, to give you guys a tail into your question. Date night for you and your wife. Steal away, get away from the kids, and just the two of you go out. And just remember, it's a time to reflect on, hey, life is crazy, life is stressful, life is wild, but you know what? It's pretty good. It's pretty sweet. We got wonderful things going on in our life. Annual net worth statement, you do that. That allows you to keep the long-term perspective on, okay, yeah, even though right now things feel tight and we're pulled thin, we're ultimately working towards a great, big, beautiful tomorrow. And then on those date nights or in those conversations, define what are the things that make you happy? What are the things that you actually derive value from, and do more of those things? And what I think you're going to find is that they're probably not things that cost a lot of money, especially not at this station and season. I'll let you give away a tumbler, then I'm going to tell a story.
Great. I am going to give away a tumbler to David L. We really appreciate you asking your question. Just email winner@moneyguy.com. Story.
This is more just for me, so I hope you guys enjoy this. It's been like so cold in Nashville. Like it's been, last week it was like 7 degrees, which for like Southern is just like so stinking cold. But yesterday it was beautiful.
And today's beautiful.
And today is beautiful. So I got home and I had 2 girls and now I've got a little boy who's 2 years old. And I was like, you know what? My daughter's had volleyball practice, so I was home with Stone, and I was like, we're just going to go outside. We're just going to go outside. And you know what he did? Because he's 2 and he's walking around, he's kind of starting to talk. He went and found a stick. And buddy, do you know how happy he was with that stick? Just swinging it around. Again, this is my first boy. Went up to a tree and just crushed the tree with a stick. And I was like, this is it. This is exactly what the messy middle is supposed to be. Watching my son pick up a stick and go whack a tree with. And I was like, you know what? And that was probably my best part of yesterday. It didn't cost me a dime. Didn't cost me any money at all. And I think the more that we can reflect and recognize those things, whatever those things be, for you, maybe it's a good workout or a really good run or waking up early in the morning or whatever that thing is, if you can begin to focus on those things, some of the busyness, craziness, hecticness, and stressfulness of life can just fall away. But it takes intention and it takes effort, and you have to be willing to put yourself in the mindset to recognize those things.
You telling that story last week, I'll just say his name, Carter, our third in command here. He sent us a message to me and Bo. This is the risk of dealing with online personalities. And he said, top 3 best day of my life, because they went on a family vacation, and his oldest son, who's not that old, they're doing diamond ski. By the way, I don't ski. You ski.
Yeah.
Most poor kids don't ski. But anyway, best top 3. He told me yesterday. He was like, yeah, I had to be careful how I worded that because I got in trouble because my wife started counting down. Wait a minute, we have 3 kids. What? We've gotten married. How can you say this is the top 3?
What was the other 2 days?
But it is amazing. I'm telling you, that is experiences over stuff is where the jam is, because forever his son is going to remember that day. He's going to remember that day. And that's the stuff that just gives me the tingles on the arm and makes the hair stand up, is because I can visualize those things with my own life, and that's why people wonder why in the world I love going to Disney World so much. And when I've lost my father at a young age, and then I still think about going between Peter Pan and It's a Small World, and those things, that is priceless. And that's why money is only a tool, and you have to figure out how to use it and extract as much of the value of happiness and really purpose that you can. And it's not going to be in the stuff. I can tell you that. I've been poor and now I've been wealthy. And yes, it's nice. I love that I can go buy concert tickets and do all this other stuff, but it still doesn't change the way the relationship stuff works.
I love that.
That is very well said. I mean, one of our missions here is to help take some of the stress out of the personal finance part of your life so that you can actually focus on what really matters, whether that's out there playing with a stick with your 2-year-old or the big moment of you got to take your kid out on the slopes. Like, it's really about that relationship, right? And actually what matters to you. So that's why we do what we do. That's why we're here every Tuesday at 10 a.m. Central answering your questions. And that's why moneyguy.com/resources is chock full of free resources to help you go deeper on what we talked about today. So be sure you check that out.
Guys, I mean, I've loved it. I feel like today was a fun day.
Every day on the Money Guy Show is a fun day.
We do have a good time. 2 for 3 on some jokes with comedian Nick. That's a good thing.
Did he get 2?
We got to preview that. I previewed that Caleb might be doing some crazy things in the studio here.
Of course he would say that.
Reeby did some product promotion throughout the day. I mean, what some pretty cool. I'm proud of it.
I talked about the food course. I was like, I don't know.
You made a little side eye. That was a compliment.
Money.
I mean, look, my stuff is so bad that you can't even tell when I'm giving you compliments anymore. But I think if I could boil it down to one statement, is there is more to wealth and abundance than money. And man, are we blessed to hang out with you guys. We do not take you for granted. Please subscribe. Please keep supporting us. And we're going to keep doing this because we really do believe in abundance and just loading you guys up. I'm your host, Brian Preston, Mr. Bo Hansen, Money Guy team, out.
Great.